And as we mentioned, the three major indexes posted their first monthly declines of 2019, even as volatility indicators spiked. Oil, by the way, fell by 16% in May. That was its biggest monthly decline since November. Mike Santoli's been covering the markets for us from the New York Stock Exchange. How much of a surprise was this sell-off? I mean, the old adage is sell in May and go away.
That's exactly right, Bill. And I do think that, we had one of the strongest 4-month starts to any year in decades through April. The S&P 500 up more than 17%. So I do think some kind of pullback was probably expected by many investors. I do think the intensity of the decline and the fact that really there was no relief along the way. Every week was down. And of course, the tariff news made it about a little bit more than just giving back some gains and having some flat profits for the first half of this year. It became about exactly how the world is going to grow for the rest of this year. And in fact, to me, reflected most in the bond market when you have those treasury yields, at multi-year lows just about as the markets sort of brace or perhaps expect the Fed to cut rates in response to all these pressures.
Well, the trade issues are still with us. So what are you hearing? With the trade war still in place, is the selling expected to continue, or do you think we're bottoming out a little bit and maybe ready to bounce?
Yeah, so there are some indicators that say just because it's been so lopsided to the downside in the month of May, perhaps we should be in for some relief. What happens is when the market is under a lot of pressure, 1 out of every 6 stocks in the S&P 500 is below its December low. So there really has been a lot of damage below the surface, and it takes incrementally more bad news to keep the market going lower in that environment. I do think that you should expect some kind of a bounce. Also seasonally, when you've had a weak May after a strong 4-month start to a year, June tends to be a little bit better. 7 out of the last 9 years in that condition, you did get a little bit of a bounce. But I do think it's important to remember the big picture issues are still with us, and I think the market craves some kind of confirmation that the U.S. economy remains resilient to a lot of these threats.
Very quickly, Mike, what do you make of some of these analysts on Wall Street who are suddenly now calling for rate cuts before the end of the year?
It seems these economists are kind of capitulating to the message of the bond market. We have not really heard from Fed voices themselves that they're really moving very fast in the direction of considering rate cuts in the next few months. But it seems that the market action has been so relentless that a lot of these economists are saying, maybe the bond market knows better than we do.
Mike Santoli at the New York Stock Exchange. Have a good weekend, Mike. Thanks.
Thank you, Bill.